Hello guys, welcome to this Peep Show. We are Wednesday the 6th of May 2020. Sylvain Logan Adam with you today for a new Peep Show. Today the ADP report will be published at 4 o'clock Paris time, and we will discover what is currently happening in the US, and also what to expect for the NFP, which will be disclosed on Friday in the US. So the ADP job report is one of the estimations that will give us I will say the concrete impact of the coronavirus shutdown and lockdown across the US, and will also show us how many people lost their job and are currently totally out of any activity. And this is an opportunity for us also to get ahead and prepare ourselves for the NFP of Friday. We are expecting a very bad number. Okay, we are expecting a very bad number. So in the US currently there is something like 20 to 21 millions of people who just lost their job, and the market is currently looking to this number to see if the situation is currently worse than 21 millions of people who just lost their jobs. The US unemployment rate just boomed in less than a quarter. Okay, in the last 3 months, we went from 3 point something, 3.4, 3.5% of people unemployed in the US, and we jumped to 14%, almost 15% of people without any job. So 15% of unemployment rate. Today, the big challenge and the big thing that is ahead of us is to see whether or not we'll have something that is worse, and maybe we'll have a job, an unemployment rate that will be way greater than 14%, and or not. Okay, so the market is seeing that. If you look at the Dow Jones, this is the technical configuration for now. So we had a pretty bearish move at the end of last week. This week, Monday, Tuesday, we had an up market. We have currently a resistance right now, and people and the market as a whole is waiting for this new figure to be published at the end of the day. If you look at the Forex market, which is very interesting at the moment, because yesterday the Eurozone just took a big hit. People and judges across Germany and incur just said that they are strongly against the European Central Bank monetary policy, and especially the PSPP. So basically, the PSPP is loans that are given to enterprises, etc. And the goal of the PSPP is to refinance the economy when things are bad. There is also something new that was disclosed during this crisis. In Europe, we created something like a loan, a pandemic loan. Okay, just to make it very simple, a pandemic loan. Okay, so the European Central Bank is printing and injecting money to fight the coronavirus crisis, like the Fed did, etc. Yesterday, the euro against the US dollar just lost so much ground, and this is what we are seeing right now. So the trend is bullish, is bearish. Sorry, not bullish, bearish, and this is what we are currently seeing. I've been speaking to you, and I've been telling you this for a long time now, but it's always good to remember the fundamentals on the Eurozone. We are on the verge of a Eurozone collapse. Okay, Great Britain just left the euro. Italy might be next. Okay, because you have spreads across Europe that are widening themselves. Okay, some countries such as, for example, Italy, Spain, and southern countries in general are borrowing money at an expensive rate compared to Germany, for example, who borrows money at a negative interest rate. People are giving money to Germany to give them money, so that's kind of cool, all right? You borrow money to people, and they pay you to take for you to take their money. Best deal ever. So Italy and all the southern European countries wanted something like called the Eurobond. Okay, so to mutualize and I would say to have a mutual debt. Okay, to create a mutual debt and to allow those people and those countries to borrow at a better rate. But Germany is not crazy and doesn't want that, because they have a very tight way of spending the money of the state, and they are not willing to pay for others. So this is the situation that we have right now that is lasting for many years. But right now we are on the verge of something that is greatly more, I would say, more critical than it was before. And I really think that we can reach the parity level within the next 15 months. Again, we can't really time when the market will do something. But if you look at the fundamentals, they are not good. And I would be betting more on the US dollar than on the euro if you have to ask me. So I'm bearish on the euro dollar, and the parity is one of the target level that can easily be achieved over the next 15 months. That's my 2 cents. All right, guys. That's all for me. If you have any questions, feel free to ask your question on the Wheel of Arya Facebook group or also on the YouTube channel. We are looking at every comment, so if you are commenting, we'll reply. And we see each other very soon on the Arya Starter Pack. The link is on the description. See you tomorrow for our last clip show of the week. Bye bye.